Are you panicked about the stock market? In this short video, I'll explain to you what's going on and what you should be doing. I'm Tony Hansman. I'm a licensed financial advisor with Guardian Financial, and here's what we're seeing over the last couple days. The job report fell short. It was supposed to be around 180, turned up to be about 114. And the Fed's job is to help keep unemployment low and inflation under control. So we're going to see what happens with Jerome Powell and his team if they call some emergency meeting or not. Then at the same time, you got your Japan market, the Nikkei, have one of the worst days since 1987. But this is important to understand of what's called the carry trade. This is simply people who are borrowing low in Japan and then turning around and invested in other places such as the US to make a lot of profit. But what happened is Japan raised their interest rate to protect their currency. And now what's happening is their investors are being margin called, causing all sorts of problems. On top of that, you've got Warren Buffett selling huge trades of Apple. So he's got more cash on hand. And now people are saying, does he know something or is he just simply rebalancing? So we'll see. But he's been doing it over the last 2 or 3 months. On top of that, you've got the war in the Middle East. Who else might that be dragging in? So a lot of things happening on top of each other. But for my investors, we design a plan with days like this already built in. My phone doesn't ring off the hook with my clients panicked, right? We develop an investment philosophy, right? And then we do behavioral coaching. Do you want to be that guy who's sitting on the sideline last year and missed a 20% return? Or the guy who tries to pick individual stocks and time the market or make ill financial decisions that hurt your retirement plan? I don't think so. Having an investment philosophy along with behavioral coaching is vital to your long-term success, in my opinion. You got to have emergency cash. You got to have short-term money for those 2 or 3 years that the market might be down. That short-term money could be maybe CDs, high-yield savings account, ETF, short-term bonds with a short duration of less than 3 years, right? Maybe you got some guaranteed income plays in another portfolio, but diversification is very, very, very important. But the stock market is for your long-term money, right? Everything that I see is normal. I know that may sound crazy, but hear me out. Since 1928, the market has had about a 5% or worse drawdown and over 90% of the time during those years. Volatility is the price of admission when you're in the stock market. You have to control that by incurring your risk tolerance and diversification. You got to stomach the ups and stomach the downs and stay disciplined. Otherwise, you're likely going to lose money. Remember, the stock market is for the long term. You got to have a 30,000-foot view of this thing. If you're looking at the market over 1 day, 1 week, 1 year, you're likely going to get burned. Nobody knows what's going to happen in the future, so don't be fooled by this. Have a 30,000-foot view and look at the market for the long run. Maybe as you're getting older, you take less risk in the market or you finally get out completely, but this is not jumping in, jumping out, trying to time the market. Those guys likely are going to get burned. Right? A plan with us with volatility has already been built in. If you feel panic, worry, stress, then you need to grab my book, The 10 Tax Commandments, read chapter 2. It will help you with your behavioral and investor coaching along the way. So remember, hey, past results are absolutely no indication of future results. And remember, always consult a licensed professional who understands your specific goals and dreams.